in the crypto market, in the market in general. In these last few days, there has been a sharp correction in the market, and we're going to look at what's happening. The first thing we need to understand is that the main cause of this correction we've seen in recent days has been all the issues related to the armed conflicts happening around the world. But this time, it was specifically due to the United States attacking 3 nuclear bases in Iran. This attack has caused the market to waver. We've also had threats of closing the Strait of Hormuz, which could cause oil prices to skyrocket and make it much more expensive. And Donald Trump is trying to talk to China to convince Iran not to close it. This has been the main fundamental cause, because these are fundamental news events triggered by happenings around the world. This has been the main reason that has caused the market to correct. But here, what we need to pay attention to, for example, in the case of Bitcoin, we're currently looking at the weekly chart. We need to note that Bitcoin has performed very well, despite having corrected down to the $98,000 zone. The weekly candle, which is why we're looking at the weekly candle, closed at $101,000, meaning it has respected the 100,000 zone as support very well and closed above it. This gives us a sense of resilience, a sense of strength, and the feeling that Bitcoin should continue to rise. Despite all the armed conflicts, we see that it is holding up very well. In the case of the general market, like the S&P 500, we can also see that it is staying in the area of all-time high, so we are very calm in that regard. But going back to Bitcoin, I want you to see very clearly how something we've been waiting for a long time, since November 2024, when we entered this area above 90,000 and 100,000. Bitcoin has basically been consolidating in the area between 90,000 and 110,000, which is this area here between the two blue lines that we can see on the screen. It's true that we did have this temporary correction where we dropped to 75,000 and stayed between 75,000 and 90,000 for a few weeks, about a month and a half or so. But basically, the area to consolidate, the area we've been consolidating since the end of last year up to today, all through 2025, is the area between 90,000 and 110,000. And within this range, the move that Bitcoin has made is incredible, because if you look here, we've basically been consolidating since May, since the end of May, all through June up to today. Not just between 90,000 and 110,000, but we're now narrowing that range, tightening it to between 100,000 and 110,000, turning the 100,000 mark into a support, into a floor. In other words, every time Bitcoin drops down to 100,000, it bounces back strongly. So we're no longer in the range between 90,000 and 100,000. We're now trying to narrow that range to between 100,000 and 110,000. And the more we narrow that range, the more momentum we give it, so that in the coming weeks or months, we could see a breakout to the upside for Bitcoin, breaking through the 110,000 or 112,000 zone, which is the all-time high we've reached, and we can move on to new all-time highs. I still believe that in these coming months, either this month or next month, in July, I think we're going to see 120,000. I see it as very likely that we'll reach between 118 and 120,000, because Bitcoin looks eager to break through that 110,000 zone. And I still firmly believe that in what's left of the year, we're going to experience the big rise of the bull run, right? What is expected for this year, 2025, is that from now until the end of the year, in the last quarter, October, November, December, we could reach that peak. That peak, which I still believe will be in the range of $180,000 to $200,000. That's the price I think we're going to see for Bitcoin, and I remain very firm in that belief. And for now, that's what the data shows. Both technical analysis, fundamental analysis, on-chain analysis, and fear and greed analysis all show that really everything points to us heading toward that range. Apart from everything that's happening, obviously, in terms of adoption, right? All the regulations that are happening, all the massive adoption we're seeing from institutions, the whole ETF issue that keeps bringing liquidity into Bitcoin. All of this leads us to understand that Bitcoin is going to move toward that range. And it's true that for now, Bitcoin is leading the way. The rest of the altcoins are still dead. That's just how it is. For example, if we look at coins like Ethereum, we've seen that it reached $2,100. Right now it's at $2,245, but as we can see here, it's taken quite a hit. That's just how it is. Let's switch to the daily chart so we can see it more clearly. We can see here how we've spent several days in this area around the 200 period moving average, this green line that you see here on the screen. But with this latest correction over the weekend, we've dropped below the moving average, even below the 50 period one. So what do we have here that's positive? We have the fact that almost all the moving averages are about to cross. When all these moving averages here cross the 200, the 20, the 50, all of them, we're going to see several sharp movements. The first one will be the shortest, so to speak, which will be the crossover of the 50 period and 20 period moving averages, which are the red and yellow lines you see here on the screen. You can see that they're just about to cross. When this crossover happens, usually what we see is that when the 20 period moving average is above and the 50 period is below, and then they cross in the opposite direction, that is, the 20 drops below and the 50 rises above, there tends to be a correction. Right now, we're already experiencing that correction with this crossover, aren't we? With this previous crossover, we're already seeing the correction. But the big difference here is that the 200 period moving average is trending downward. It's likely going to cross with the 50 period moving average. And as soon as the 50 period moving average crosses the 200 period one, since crossovers with the 200 are much more dramatic, we're going to see a strong surge in Ethereum. And the rally we see in Ethereum is really, I can't stress this enough, what's going to kick off the alt season. We're going to see the alt season. Alt season is something necessary for this cycle. We haven't had an alt season. We see Ethereum in the dumps. We see all the altcoins in the dumps. We haven't had an alt season. We're going to see an alt season when the bull run, what the bull run really is. The essence of the bull run is confirmed, not just in Bitcoin, but also in the rest of the altcoins. For example, if we look here, we can see that right now practically 65% of the dominance is Bitcoin and 8.7% is Ethereum. Ethereum's dominance in the market keeps dropping more and more while Bitcoin's keeps increasing. At the beginning of this year, Ethereum's dominance was around 12%, 13%. We've seen how it has steadily declined. All of this will eventually reach a point where it turns around. And the difference is that as long as Bitcoin continues to gain more market capitalization and keeps growing, when things turn around and Bitcoin's dominance starts to drop a bit while Ethereum's dominance rises, Ethereum's movement will be much stronger, much more aggressive, especially considering that Bitcoin's market capitalization and price are much higher. But as soon as this reverses and Bitcoin's dominance drops a bit from 65 to 60 or 55, and Ethereum's dominance rises again to around 13%, 14%, or 15%, Ethereum's price at these percentages will be much higher. It will be a price for Ethereum that is practically at all-time highs. I'm not sure if you fully understand this, but it's something extremely important. Normally, Bitcoin's dominance has never been this high. It's never been this high in recent years, ever since Ethereum and the altcoins have been around. Right now, it's higher than ever. Ethereum's dominance has always been above 10% and has usually been between 12 and 13%. What's going on? Ethereum's dominance has dropped a lot, as I'm explaining to you. It has dropped significantly, and Bitcoin's has risen significantly. But Bitcoin has increased its dominance tremendously by reaching new all-time highs with a very high price and a very high market capitalization. So as soon as this shifts even a little in the opposite direction, since Bitcoin now has a higher market capitalization, any increase in Ethereum's dominance percentage will cause Ethereum to appreciate even more. And as it appreciates more, the rise it will experience will be greater. Therefore, when it pulls the rest of the altcoins along, they will see even bigger, much more aggressive increases. And I still believe that the alt season we're going to see this year is going to be incredible. That is, normally there are two alt seasons. Throughout a bull market, throughout a bull run, there are two alt seasons. The recovery alt season and the new all-time highs alt season. We've been waiting for the recovery alt season for a while now, and it hasn't happened yet. And the time frames are getting shorter and shorter, meaning we're getting closer to that last quarter of the year when everything should speed up and we could see the biggest explosion in the world of cryptocurrency. There are basically 6 months or less left. So right now I think there aren't going to be two alt seasons. I think there will be one alt season, just like there have always been two in the last market cycles. This time I think there won't be two anymore because the time frames are getting much shorter. In fact, there's very little time left, as I said, less than 6 months until we reach that point, right? So I no longer think the market has enough time for there to be two alt seasons, but there is enough time to merge those two alt seasons into one, creating a super alt season, which will not only send Ethereum back to its all-time highs, but will quickly surpass them in the coming month. And this, as a consequence, will affect the rest of the altcoins. Many of you were telling me yesterday, David, Polkadot has hit a new all-time low again. It literally dropped to $3. If you know what I did while many of you were saying this, coming from a place of fear, from ignorance, from not knowing what's going on, what did I do? I said, damn, for every $3, I started opening a long position. I didn't place it at $3 exactly, but I did at $3.10. At $3.10, I opened a long with a small difference. As you already know, I usually open my longs me leveraged bullish trades. For those who don't know what that is, I open them with 10 times leverage. That is, if it goes well for me, from the point where I buy it starts to go up, I multiply the profit by 10. In other words, if Polkadot goes up 10% in spot, since I'm leveraged 10 times, I make 100%. That means I double my investment with each trade. For every 10% that Polkadot goes up, instead of making 10%, I make 100%. In other words, I double my money. So what did I do this time? I said, the price of Polkadot is extremely low. It has hit a new support level, a new all-time low, and a new important psychological point, which is $3. This time, I didn't use 10 times leverage, I used 20 times leverage. I don't usually do that. I almost never use 20 times leverage. It has to be some super rare, super exclusive occasion for me to take advantage of 20. But this time I used 20 times leverage. With Polkadot opening at $3.10, I placed the trade. As I said, I've opened several trades, some larger, some smaller, but basically it's the same trade with 20 times leverage. Why 20 times? Because there are fewer and fewer chances that it will drop much further. That is, right now, Polkadot could obviously still go down, but the odds are getting slimmer. I mean, right now, for Polkadot to keep dropping, for it to go down to $2 to just over $1, I mean, it's a very complicated thing, isn't it? Considering the project behind it, we're not talking about some crappy project. We're talking about a major project created by the inventor of smart contracts, the co-founder of Ethereum, a project that many other companies are taking advantage of and using its technology. In other words, Polkadot is a unique project, both technologically and in terms of development. Since its inception, it hasn't stopped developing and continues to grow. In fact, they even want to launch Polkadot ETFs, and they're not going to launch ETFs for some worthless coin, so to speak. So I opened a long position at 20 times leverage. Actually, besides the ones I opened in my personal account, I also opened one here for you also, you can see it. Here it is. I opened a small one here. How much did I open it for, more or less? Here for approximately $200, $196. I opened it at a price of $3.01, or $3.13 to be exact. My liquidation price, just so you can see, is $2.35. That is, for my long position to be liquidated, Polkadot would have to drop to $2.35. Obviously, here you can see how I opened it with 20. That is, I opened it in cross mode and with 20 times leverage. For example, just for opening this trade, they charged me a fee of about $3 practically, but at this moment, it already has a profit of 27%, 27.95%. That is, I've already made $54.85 in profit. So at the moment, it's in the green, but what am I expecting from this trade? I'm expecting much more from this trade. In other words, I don't expect it to just reach a 10% profit or even 100%. Why? Because I used 20 times leverage. So this is a trade where I really expect to easily, at the very least, multiply my money by 10 quickly. Being able to multiply by 10 means turning $200 basically that I've invested into $2,000 in this particular trade. Also, just so you know, I have the same trade replicated in my personal accounts with different amounts, right? But this is just to give you an idea. I opened it here, I opened it a few hours ago. I can't remember if it was last night, but I don't remember exactly right now. I opened it before going to bed when it was more or less at those prices. And here you can see a bit, just so you get an idea, like what did I do when I saw this situation? Freak out, let myself be overcome by fear, or take advantage of the opportunities. Obviously, I chose to take advantage of the opportunities. I thought, damn, Polk got $3, I'm going to try to grab it. I didn't get it at 3, went up a bit, I got it at 3.1. 3.1, I put in a good long position. This time, instead of using 10 times leverage, I used 20 times leverage because I think, well, it's harder, right? For it to drop even further in price. And right now, as you can see here, with my hedging strategies and all that, for my long position to get liquidated, it would have to go down to $2.35. In other words, can I afford for it to drop to $2.35? Yes, obviously I can afford it. How much would I be losing if Polkadot drops to $2.35? Well, I would be losing approximately around $800 if it comes to that, right? At $2.35. I would be losing, well, the $200 investment plus the hedges that I've put in place. It's worth it for me to risk $800 knowing that if it just makes a quick move to $2,000, I can make a profit. It's worth it for me. That's not the main idea, I'm telling you. I mean, the main idea is in the short term for it to reach $200 to multiply by 10. But that doesn't mean I'm going to close the position there. Why? Because I got in at a good price that I want to hold on to over time. So what I'm going to do with this Polkadot, with this long position, is that when Polkadot is getting close to those $2,000 in profit, what I'll do is move my stop loss to protect myself. So if I'm up 10 times my investment, I'll secure at least 5 times my profit. I'm going to move the stop loss there and let it keep growing because it's a long position that could potentially bring me much greater profits. That is, if I've opened a long at 20 times leverage at $3 and Polkadot goes up to $30 during the bull run, imagine it doesn't even reach its all-time high of 55, but gets to about half of that, $30. That would basically mean if I use 10 times leverage, I'd be multiplying my investment by 100. But in this case, I've used 20 times leverage. So if Polkadot reaches $30 in this bull run, I'd be multiplying my investment by 200. And in the end, it's a simple calculation. If we take, for example, a calculator so you can see it clearly, we take $200 and multiply it by 200. That would be $40,000. $40,000 is basically what I could make with a single trade, a single $200 long. And what I've put in is just $200. The rest of the hedges are for protection, just in case it reaches that price. But what I've actually put in is $200. If Polkadot goes from this price to $30, which is roughly half of its all-time high, considering the all-time high is $55, if Polkadot were to reach $30, it would basically be multiplying by 200. If it reaches half, if it gets to $15, if Polkadot reaches $15, it would be multiplying by 100. Is it feasible to reach $15? Well, obviously it's feasible. We've seen that during this last bull cycle, Polkadot reached $12 on 2 different occasions. We can see it here. Once we had it here in March 2024, and again here in December 2024, which was less than 6 months ago. We've seen it reach $12, and we know that 15 would be a 100 times return, while $12 would be 75 times. So do I think Polkadot can reach these prices again if Ethereum recovers? I think so, which is why I consider it a good trade. I think so. Obviously, this is not investment advice or anything like that. I'm simply sharing with you here my way of doing things, the strategies I follow and keep track of, and the reasons why I do certain things, right? That is, why do I open a long position in this area? Because of the reason I'm explaining to you. Why not a 10 times or 20 times position instead? Because of this other reason I'm explaining to you. What is my idea and my intention? Well, to reach those targets, right? Those price levels. Am I asking for something magical? No, right? A new all-time high, new record highs, and so on. No. How much are we waiting for? $15 to multiply by 100. $30 to multiply by 200 in the best case scenario. Is it worth it? Obviously, yes. If with $200 it reaches $30 and we can make $40,000, then just imagine with $2,000. If you have a trade like this in another account with $2,000 instead of 200, then instead of $40,000, how much would it be? $400,000 from a single trade. Is trading with cryptocurrencies profitable? It's profitable, obviously, if you know what you're doing, because you've already seen here that I haven't opened a long in isolation, where if it drops 10 or 5%, they liquidate me. I haven't opened a long position, recklessly without any kind of reasoning. I haven't opened a long position, and I'm not going to be here watching it every day, 24/7, to see what happens. No. I've already left everything set up and programmed. It's a long position, so I can forget about it. It's a long position to say, damn, I got a good price, and that's it. I got the price. I got it at 3.10. Awesome. Now I'll just leave it there and let it run, and whatever happens, happens. In the worst case scenario, look, I could lose $800. Well, too bad, $800 lost, but at least the chance to win is greater than $800. Nothing ventured, nothing gained. That's what they say in the end, right? And that's kind of the idea and what I try to get across, Well, some people freak out, get scared, and don't know what they're doing or saying. Others of us take advantage of opportunities and make money in the cryptocurrency market. Things we need to keep in mind. Possibly after Jerome Powell's last meeting now, changing the subject, they're going to put a bit of pressure on him so that at the next Fed meeting, they lower interest rates. For now, there hasn't been enough pressure. The next Fed meeting is on July 30th. At the moment, 85% of people say that they don't think interest rates will be changed, that they'll stay the same. 14.5% think they will lower them. For now, obviously, it's still too early. We are going to continue relying on what this page says, which has never been wrong. It has always been 100% accurate. So as long as it's a page that has been right 100% of the time, we're going to assume that the most likely scenario is that interest rates will neither go up nor down at the next meeting. Although in the upcoming days, we will have a couple more meetings with Jerome Powell, the chairman of the Federal Reserve System, where he will be speaking. This is customary, as usual, not specifically about interest rates, but rather about various developments and things that are going to happen in the near future. And he might possibly, perhaps, hint that interest rates could be lowered sooner rather than later. We have to keep in mind that Donald Trump has really hammered Jerome Powell, saying Europe has already had about 10 interest rate cuts in the past year or so, and yet here we are still with extremely high interest rates, very, very high. And they're there, pushing. And in the end, well, when you keep pushing and pushing, there comes a point when it gives way, right? There comes a point when it has to give. So for now, there are no guarantees that interest rates will go down, but depending on what Jerome Powell says, we have to stay alert. It's possible they might lower them, and that would be beneficial for us and for the crypto market. On the other hand, the fear and greed index with Bitcoin, we're neutral, obviously, because that's what we're seeing clearly. There's no euphoria since people aren't euphoric about Bitcoin, but there's also no fear because we have Bitcoin above $100,000. We have to be realistic. However, if we look at the general fear and greed index for Bitcoin and all cryptocurrencies, we're at 37 points, which puts us in the fear zone. What does that mean? Obviously, not counting Bitcoin, the rest of the altcoins are, well, in extreme fear. In other words, if we took Bitcoin out of this equation, which is what keeps it at 37 points if it were just the altcoins, we'd be in extreme fear. The fear and greed index for altcoins would be equivalent to being in extreme fear. And what do I do when we're in extreme fear? I've told you this many times. When we're in extreme fear, what does David do? He buys. Obviously, I'm not going to start buying meme coins or projects without fundamentals. I want solid projects with potential, projects that are fighting to launch their ETF, projects where there's institutional interest behind them. Those are the projects where I invest, where I hold spot positions, where I open futures trades, take out loans in futures, where I provide liquidity pools in that type of project, not in junk projects, so to speak. So since I know we're in a zone of extreme fear with altcoins, if we take Bitcoin out of the equation, what I'm doing, as you've just seen in the podcast, is opening positions and continuing to position myself to take advantage of these moves as soon as the market really takes off. And for the market to take off, as I've told you before, we're depending on our little friend Ethereum. If Ethereum doesn't take off for now, just wait, we're waiting for now. We're basically on standby towards the expectations of what Ethereum does. Once Ethereum makes a move, then we can assess what to do next. And we'll see. So pay close attention to what Ethereum does. But for now, as I said, I'm not worried at all about any of this. I'm really not worried. All this stuff about wars and so on, it's actually going to benefit us. If there's war, it'll benefit us. If there's no war, it'll benefit us too. Why? Because we've already seen how the market reacts. We've already seen the market's reaction. Besides, there's something very important we need to keep in mind, which I've told you many times. Well, I'm going to put the screen in full view now to tell you this. Actually, no, because I still want to show you the SP 500 and gold charts. There's something we need to keep in mind. SP 500 at all-time highs, gold at all-time highs. Why are we at all-time highs? Despite having military conflicts, despite the fact that interest rates still haven't been lowered enough, despite everything we currently have on the table fundamentally, why aren't we in the dumps? In other words, why is Bitcoin still above $100,000? Why are the SP 500 and the stock market still practically at their highs? Why is gold still at all-time highs? Why? That's what a lot of people are asking. Why? Because right now there's something on the table that is more dangerous than any war, more dangerous than any kind of financial conflict, tariffs, international trade issues, or anything else. There's something that affects all of us, something that screws us all over, and that is inflation. Inflation is eating away at our money, it's consuming it, And let's break it down so you can see the scale of the problem. If you're someone who has €1,000 saved and inflation, it's up 10% annually, you're going to lose €100. In other words, if you have €1,000 that you don't touch for a year, after a year, those €1,000 will be worth 900. You might say, damn, €100 less. Maybe you think, well, €100 less doesn't really affect me that much. I don't know, because that's about what I spend on drinks every month when I go out partying. Or it's what I spend on cigarettes every month, putting crap into my body, for example. It doesn't affect you that much. Let's move on to a bigger scale. Imagine someone who's middle-aged, who has managed to save up €100,000 or dollars in the bank over their lifetime. And in just 1 year, that person, just for having €100,000 or dollars saved in the bank, loses 10,000 for no reason at all, without doing anything. In other words, you have 100,000 and you lose 10,000 for no reason at all. It doesn't mean they're going to take 10,000 euros out of your bank account. No. It means that your 100,000 euros are worth 10,000 euros less. If you have 100,000 euros, but in a year, you'll only be able to buy what you could have bought with 90,000. You've lost 10,000 euros in value. That already sucks. It gets on your nerves more, right? You say, damn, it takes me a lot of effort to earn 10,000 euros in a year. An average middle-class person who's been working their whole life, 10,000 euros is practically half of what a middle-class person earns in a year. That's a fact. Let's move on to the next level. A person who has €1,000,000, someone who's reached their first million, to say, damn, in 1 year I've lost 100,000 euros or $100,000 in a single year, that really gets to you, because $100,000, 100,000 euros, is about what a middle-class person here in Spain earns in 4 years of their life, more or less, in 3 or 4 years. And that stings, you know. But now let's move on to the next level, where the big leagues play, where all these people who are investing in this kind of thing actually put their money. We're talking about billionaires, multi-billion-dollar companies, investment funds, banks, major institutions. Let's say these are people who have 100 million in euros or dollars. If those 100 million euros or dollars are just sitting there in the bank untouched, saved, in a single year you lose 10 million euros. $10 million. Do you realize how crazy that is? Do you realize how insane it is to lose that much in just 1 year, and then the next year lose another 10, and the year after that another 10, and after 5 years you've lost 50% of your purchasing power, and after 10 years it's practically as if you hadn't done anything at all, or as if you had only saved a few pennies, just a handful of coins? Loose change. Do you know how frustrating this is right now for the average investor, for someone who actually has real money? That is really the true problem. Many of you don't see it because you're used to not saving, not investing. You spend everything you have, you live day to day, and you don't know what it's like to have savings that lose value. Because you live day to day. You haven't developed the habit of saving and investing. But the people who do save and invest for years are seeing how inflation is eating away at their money. That's why they prefer to have it invested in stocks, in the the 500 most important companies in the United States. In gold, which protects you from inflation, since it more or less maintains its price and value, and over the years it goes up. In Bitcoin, which has proven to be a star and a winner in 4-year cycles, no one has lost money with Bitcoin in 4-year cycles so far, since it was launched 15 years ago. In real estate, they own a property, bricks and mortar, something tangible, something that maintains its value and even appreciates over time. Every 10 years, a house is worth more, for sure. Every 10 years, it ends up being worth more and more. It protects you from inflation just through the appreciation of your house. And on top of that, you can earn a return if you rent it out. You receive passive income. That's why investors, people who have money, don't keep their money in the bank, they don't keep it under the mattress. They have their money invested because it's the only way to protect yourself from inflation. Investing is something mandatory, because in the end, if you don't invest after 3, 4, 5 years of not paying attention, you've lost half your money. Literally, what you can buy today with that money in 5 years will be only half as much. And this is a reality. And you've seen it, for example, with the changes that have happened since 2020, when what happened in the world happened up until now, 2025. 5 years. In 5 years, what have we seen? That everything is practically twice as expensive? Why has this happened? Because everything became twice as valuable? No, because of inflation. Get it through your damn head, it's inflation. So saving is mandatory. Investing is mandatory. Investing what you save is mandatory. Because if you don't, you're losing. It's useless. I mean, it's like throwing your time and your money in the trash right there under the mattress. Do you know how many poor elderly people there are who have worked their whole lives, and because they don't have the knowledge to invest, they've saved their money under the mattress, and now they take out the money thinking they have a retirement or an inheritance for their children and so on, and you say what they've earned is worth nothing. This 50 years ago was the king of mambo, but now it's not. Now it's worth nothing. Do you know how sad that is? And all of it just for not investing. So get it into your head. Invest, no matter what. Gain knowledge, get information, but invest, because if you don't, you're going to go broke and you keep losing more and more money. In the end, you'll lose much more money by not investing than you would with the risks that come with investing and something going wrong. You lose much more by not investing, I assure you. And throughout my life, I've invested in many things. I've lost a lot of money, I've had many investments, and many of them have gone badly. Some investments have turned out badly for me. People have scammed me and stolen my money because I invested with them many times. But in the end, it was worth it. I've gained more than I've lost. And you, in the end, have to do the same. You have to take risks, because if I hadn't invested, if I hadn't taken risks, if I hadn't lost money, right now I wouldn't have anything. So yes, there are risks, there are things that work out, things that don't, and people who will try to screw you over along the way. But at the end of the day, it's worth it. At the end of the day, every effort has its benefits and its rewards. So from here, I encourage all of you to study, to invest, and to get moving. And if you want free knowledge to learn, well, how I did it, to invest, to trade, how I do it, to get up in the mornings many times, or in the afternoons, or whenever I feel like it, grab my computer, start analyzing the market, and open a trade, let it run, and forget about it. How do I go about acquiring that knowledge? Well, for the past 2.5 years, you've had a free service here, 100% free for you, which is Ohana Trading Club VIP. It's a trading club where I have a professional trader with you every day, analyzing the market, sharing their signals, sharing their strategies, holding live classes with all of you, teaching you everything about how to invest in the traditional market and in cryptocurrencies, how to make a profit, how to know where to trade, what kind of strategy to use, even what kind of bots you can use, what kind of indicators you can use. Everything live classes with a professional trader in the Ohana Trading Club VIP. That's why I recommend you join the club, which is free for all of you, and start training, start learning from what is being explained to you. Hey, our trader has shared so many signals, so let's try them out and see how they go. You can trade using the signals from our trader, which are winning signals. We've been offering this service for 2.5 years now, providing it to all of you for free, and it's been a success. We are hundreds and hundreds of students, many people who started out knowing nothing, and today are already trading on their own, operating every day with their own strategies, their own techniques, it's all theirs. So from here, I encourage you to sign up and register on BitGet, which is free. It's our trusted exchange, the one we use for all these types of trades, where you get a 10% discount on fees. Plus, you have a ton of trading bonuses and benefits for being part of the community, and you can join the Ohana Trading Club VIP. Also, if this video has been helpful to you, I'd appreciate it if you give it a like, share it with your friends, or subscribe to the channel. Above all, make sure to hit the notification bell, because if you don't, YouTube won't notify you. YouTube can be a real pain like that. So subscribe and hit the notification bell, most importantly, and follow me on my social media to stay up to date as well. On Ohana Finanzas on Instagram, and Ohana Finanzas Official in the Telegram group. So with that, I'll say goodbye, send you a big hug, and see you next time.